For Project 3, we're going to form a portfolio of our 5 stocks and then calculate some summary returns and standard deviations and a few other things for the portfolio, each stock, the market, and the fund. So initially, you need to form each form your portfolio by combining your 5 stocks. That's question one. So Exhibit 1 in the instructions just shows you the information I need you to compute or input for your portfolio. And while I have a page in the instructions that looks like you need to fill it out, I want you to do all of that in Excel and then just print that tab. So we need the date, the portfolio value each month, and then calculate the monthly returns and the return relative like we did for each stock. So in my spreadsheet, I'm going to create a new tab and call it portfolio. Pretty sure the video is not necessarily recording that low on my monitor, but I just created a tab and called it portfolio. And then I'm going to just copy the dates from one of my other tabs and enlarge that so y'all can see it a bit. Now I need the total value for my portfolio. This is actually easy to calculate because we did most of the work in the last project. But starting with March, or the first month of our time period that we're reviewing, I am going to just add the total value of each of the 5 stocks together to create that portfolio. So I go to my first stock, I'm going to go to the first month where we had invested that 10,000. I'm going to add to that the second stock, first month, which was 10,000, and do the same for the third stock's first month, and the fourth and the fifth. Now obviously this should total 50,000 when I press enter. So if it doesn't total 50,000, you have problems and we'll need to figure out what's wrong. Now when I drag this up, it should just sum the total value for each month of the 5 stocks. So there's the total value of my portfolio. This value column already includes dividends, so I don't need to worry about dealing with dividends for my portfolio. To make things easier though, and I didn't actually put this on, actually no, sorry. Unfortunately, I'm not reading from a script. We'll just leave it at that. We'll have to do some adjustments later with our portfolio. But now I want to know the monthly return and the return relative. And I can just pull that information, the formulas, from one of my other documents because total value is directly to the left of the monthly return column. So when I copy these formulas, they should be referencing the proper cells in this spreadsheet. I'm going to take a quick look, make sure it did everything right, and it did. So there's my information for my portfolio. Make sure that you, like this font is a little bit different than this font, it looks like. This one is size 10 or 11, this one's size 10. Make sure you make everything very consistent. I'm not going to bother, but I do want y'all to. My portfolio has some interesting swings to it. It's a fairly volatile portfolio. Okay, so there's Exhibit 1. I want y'all to complete Exhibit 2, which I call the data sheet, and I'll talk about that in a little bit. But first, let's go to the next question, where I want you to complete this summary table for all of your stocks, the portfolio, the market, and the fund. And the best way, I think, to incorporate this into Excel is just to highlight it, copy it, create a new tab in your spreadsheet, and then just paste it. And it doesn't look very good yet, but it's pretty easy to fix the formatting. The first thing I'm going to do is just increase my font size because I used a size 8 in Word to get it to fit, but I don't need such a small font size in Excel. Now I'm going to widen the first column so that everything fits on a single line, and then I'm going to highlight all those rows, place my cursor on one of the rows, it doesn't really matter which one, and if I place it right between the two rows, my cursor turns to this interesting plus sign. And if I just double click, it'll automatically resize all those rows. And I'll make it pretty big so y'all can see it easily. Now I'm going to change all my generic ticker 1 through ticker 5 to my actual ticker symbols. So I'm doing Crocs, Green Mountain Coffee Roasters, Ruger, McDonald's, and Family Dollar stores. And then my fund is the Vice X fund. You'll also need to type in a Y or an N, yes or no, for whether or not these pay dividends. And I know Crocs doesn't. I can't remember if Green Mountain does. Green Mountain does not. Ruger does. McDonald's and Family Dollar stores all do. Oops. And then I know my fund does as well. And I'm just going to center all of those so they're consistent and look good. Okay. Now I want you to calculate 3 holding period returns. One for the first year, one for the second year, and one for the entire 2 years. I think I'll do the 2-year one first. So for holding period return, I need to start my formula, and I'm going to pop over to the Crocs tab. So I know that Crocs, my $10,000, ultimately turned into $8,307, and if the company paid any dividends, which it didn't in this case, but if it had, it would have been included in my column E. So to figure out my holding period return for the entire 2 years, I would take the ending value of 8307, subtract the beginning value of 10,000. There's no need for me to deal with dividends, A, because Crocs didn't have any, and B, because if it did have any, they would already be included in my total value column. And now divide by my beginning value of 10,000. And I am going to make these absolute references, and I'll explain why in a little bit. Now format that as a percentage out to 2 decimals. Now I'm just going to do the very first year, in this case from March 2011 to March 2012. Start my formula, and I'm going to pop over to Crocs' tab again. And the first year, my ending value would be March 2012, absolute reference, minus my beginning value of March 2011, absolute reference, and divided by my beginning of March 2011, absolute reference. Again, formatted as a percentage out to 2 decimals. The second year would be from March 2012 to 13. So I will highlight my ending value of 8307, absolute reference, minus my beginning value, in this case is March 2012, absolute reference, divided by March 2012, absolute reference. I am just going to double check that I have everything as an absolute reference, because this is going to save me a lot of time in a little while. Okay, Now I want my monthly geometric mean. I can just use the geomean function and pop over to Crocs, highlight my return relatives, make them absolute references, and then subtract 1. Because remember, the geomean function, all it does is multiply the numbers in the range and raise them to the power of 1 over n. It doesn't subtract that 1 for me. Format it as a percentage out to 2 decimals. Now the arithmetic mean monthly, I will just use the average function and highlight Crocs's monthly returns, not the return relatives this time. Make it an absolute reference. And there we go. I also want the geometric mean of these two returns, which I'm going to highlight in yellow just so they'll stand out on the video. I want the geometric and arithmetic mean of the two 1-year returns. To do the geometric mean, I need to calculate a return relative. So I'm going to just pop below my summary table, and I'm going to put return relative. This will be from 3/2011 to 3/2012. And then I'll return relative from 3/2012 to 3/2013. And just add 1 to those two returns above. And I'm going to copy that across even though I haven't filled in any data in for the other stocks yet. To find my geometric mean of those two annual returns, I would use the geomean function, highlight the range of return relatives. I'm not making it an absolute reference this time on purpose, and I'm going to subtract 1. And fix that feature in Excel where it adds an ungodly number of decimal places. I'm also going to just highlight something for you, and this time I'll do it in orange. Those 5 cells I used absolute references for. I didn't use an absolute reference for the annual geometric mean, and again, it'll become clear in a little while why I didn't. Now I want the arithmetic mean of the 2 yellow returns. So since they don't use return relatives, they just use the regular returns, I'll apply the average function to those 2 yellow returns. I'm not making those absolute references, they will be relative. Now I want the sample standard deviation of the monthly returns. That is the stdev function. And I'm going to go over to the tab for Crocs and highlight Crocs's monthly return column. Make that an absolute reference. To make something an absolute reference, I'm just pressing the F4 key that toggles it from being relative to absolute. This is a percentage, so I'm going to format it as that. Now I want the annual standard deviation of the sample. And so it seems like what I should do is just use the stdev function on these 2 returns. But it is technically possible for a company to earn, let's say, 10% one month, or year, and 10% the next year. So if I calculated the standard deviation on those two 10%, it would give me a standard deviation of 0. Because even though they earned the same, because they earned the exact same return each year, but they could be quite volatile in the months between those months that I use to calculate these returns. So when I calculate the standard deviation annual, instead of doing it on the 2 annual returns, I just annualize the monthly standard deviation. And to do that, I take the monthly standard deviation and I multiply it by the square root of 12. This is a percentage. No, black cells should remain blank, so I'm not going to do anything with that, my row 13, just yet. Ending weights we can't actually figure out just yet, so I will skip that. And then just to continue with my color coding, in the sample standard deviation for the month, I used an absolute reference, but for the sample standard deviation for the annual, I used a relative. So the orange cells, again, are the rows where I used absolute references. The reason that I did that is it will make my life a whole lot easier now. What I can do, is just highlight these cells and drag them. Now, because I used absolute references, they're all identical. But it's easy to fix. If I highlight the next stock, in my case Green Mountain Coffee Roasters, if I highlight the cells and I go to the Home ribbon, and the very last item on that ribbon is Find and Select, I can click Replace. And you can see right here it's referencing the Crocs tab, but I want it to reference the Green Mountain Coffee Roasters tab. If I just change the ticker Crocs to the ticker Green Mountain Coffee Roasters, because that's what I've named my tab, it will replace the word Crocs with Green Mountain Coffee Roasters ticker in all the cells I have highlighted. So I'm just going to type Crocs and replace with GMCR, replace all. It has found 12 replacements. Then I can come over here to Ruger, highlight that without even exiting my Find and Replace dialog box, and change my replace with GMCR to RGR, replace all. It needs to find the exact same number of replacements, and it should if you're doing it this way. Then highlight my McDonald's tab, replace RGR with MCD. Then highlight my Family Dollar stores, replace with, instead of MCD, it'll be FDO. Replace all. Now my portfolio is different. I'll explain why in a minute. So I'm going to skip my portfolio. And now for the S&P 500, instead of replace with FDO, it'll be replaced with, I called my tab Market. And then highlight my fund and replace with, instead of Market, it would be Vice X. If you accidentally make a typo here, it's not going to work. So make sure you don't make any typos. So now I have finished all of that, and everything is good except the portfolio. And you can see the portfolio still has numbers that's identical to Crocs. The reason my portfolio doesn't fit really nicely into this find and replace mechanism is because for all my stocks and my fund and the market, column A contains my date, B my adjusted close, C my dividends, D my number of shares, E my total value, and so on. My portfolio isn't quite the same way. My portfolio doesn't have an adjusted close column or a dividend column or a number of shares column. So it's a little bit different. Now I guess there's a way I could fix that. I could just add enough blank columns to the left so that my total value became the equivalent column, which would be column E. And I actually think that's probably the easiest way to resolve the problem, so that's what I'm going to do. So I'm going to just add enough blank cells so that I get total value into column E. So I added 3 blank columns. And I can fix that in a little while so that those columns go back to where they were. So now if I go over to my summary table and I highlight the portfolio and find and replace, I can change replace with Vice X to portfolio, and it should work just fine. Now I'm going to make sure everything is formatted the proper way. All these should be percentages, and I want them out to 2 decimal places. And I'm just going to take a quick look at my portfolio. Like, it's telling me the second year, it earned a return of almost zero, 1.46. So I'm just going to pop over to my portfolio and look at those numbers to see if 1.46 sounds about right. And so my portfolio started that second year at 67,500 about, ended at $1,000 higher. So that is a very low return. And if I really wanted to check it, I could just crunch it on a calculator, but I am fairly certain that's correct. Now, in theory, I should be able to delete these blank columns and my summary table formula will adjust properly, and it did. So now these refer to B14 instead of E, or column E. Probably a good idea at this point to save it. Alright, the next thing I want y'all to do is calculate the simple weighted standard deviation for the portfolio. Now, let me just talk a little bit about what my numbers are showing. I can see that my portfolio actually didn't do that well. The ViceX fund did much better in the sense that ViceX earned a higher return than my portfolio in terms of geometric mean, and it had quite a bit less risk, almost half the risk. So ViceX did much better. But looking at my portfolio, I don't want this particular cell right here, my G12, to be green. In fact, I don't want it to have any fill color at all. And I actually don't want those two should be black. Actually, no, they shouldn't, sorry. They should be clear. So looking at the standard deviation for my portfolio, I managed to form 5 stocks, 3 of them that had really high standard deviations. Green Mountain standard deviation is huge. The average standard deviation for a single stock is around 35%. So Crocs, Green Mountain, and Ruger all had standard deviations that were above the normal average. McDonald's and Family Dollar stores were fairly low risk. But at any rate, I managed to combine 3 really risky stocks and 2 fairly low risk stocks into a portfolio that had risk lower than 3 of the stocks included in it. This particular standard deviation calculation of 28.05% considers co-movement. It's hard for y'all to see that, I think, because I didn't actually use the standard deviation of a portfolio formula like I explained in class, but it does include co-movement. So what I want to do is, oh, and it also considers the fact that the weights of these 5 stocks varied every single month. But what I would like to do is just average the 5 standard deviations or the standard deviations of my 5 stocks. So highlighting the green cells only. You can see the mean standard deviation of my 5 stocks is almost 43%. But when I combined them in a portfolio, I managed to get that actual standard deviation all the way down to 28%, which is fantastic. What that's telling me is there's a great deal of diversification occurring by combining these 5 stocks into a portfolio. The reason the diversification is happening is because my correlations are not a perfect +1. If my correlation had been a perfect +1, these 2 standard deviations that I'm highlighting in, I don't know, purple, would be identical. If the correlations were perfect +1, those 2 standard deviations would be identical, But since the top one is much lower than the bottom one, I know I managed to get very good correlations in the sense that they were far from perfect plus one. And we'll calculate those in a little bit. Or actually, maybe that's for the fourth project. I can't remember. The next thing I want you to do is to create a dominance graph. The best way to do that, I think, is just to create a new tab. And actually, while I'm at it, I'm going to name this tab Summary Table. And then I'm going to create a new tab, and I'll call it Dominance Graph. From my summary table, I'm going to copy the ticker symbols for all of my stocks, the market, the fund, and the portfolio. Just paste them here. And then I'm also going to copy the annual arithmetic mean for all of them. And this time I'm going to go paste special values because if I just did paste, it would copy the formulas, which wouldn't give me what I need. And I'm also going to copy the annual standard deviations. Again, paste special values. And I don't want them to go across. I'd rather them be vertical. So what I'm going to do is just copy them and paste special transpose. And then I'm just going to, I could have actually done that when I was pasting everything the first time, but I didn't. Now this is my standard deviation column. This is my annual arithmetic mean, and I actually think I will put annual after it. I'm going to format those as percentages out to 2 decimals. What I want to do is an XY scatter plot, but I want the standard deviation to be my X and the arithmetic mean to be my Y. The way Excel works is if I highlight those two columns, it will take the leftmost column and make it my X, and the rightmost column will be my Y. And that's not the way I want it. So what I'm going to do is just drag my means to the right of my standard deviations, get rid of that blank column, and now when I highlight them, my standard deviation will be my X, which is what I want, and my arithmetic mean will be my Y. So now I've got these highlighted, including the titles, and I'm going to insert an XY scatter plot with just points. And ooh, things don't look things don't look good at all. Unfortunately, I can't figure out how to pause my video.